Hello, this is Todd Foster, and this is your market wrap for the week ended December 20th, 2024. In today's market, we'll talk about the volatility we're seeing. Is this the beginning of the bear market or just another bull market correction? We're getting a big bounce today. Usually the biggest bounces come during bear markets, so we'll see how this moves as we go through the holiday weeks here into the end of the year. The Fed did cut by 25 basis points, but they called it a hawkish cut, meaning he said we're only going to get 2 more next year instead of 4, and that kind of put the market into a tizzy. They're concerned about inflation again. Bonds hit long-term support, and now they're bouncing today on a lower inflation read. We'll see how things go. It's very dicey in bonds land. As we know, in 2022, bonds were wagging the stock market's tail, so we're watching that closely. We're still fairly confident that bonds should rally, at least in the initial stages of the bear market initially, and then start to move higher. But the aggressive move down recently puts that in question, and maybe rates are going to continue up without seeing that. So we'll kind of watch that over the next couple of weeks. As of now, they're holding long-term support. Commodities or oil still in a triangle. We'll see which way it breaks. The U.S. dollar is very extended to the upside. Maybe we'll see if that can roll over. If it can, it would help the metals, and the metals are very volatile right here. Silver isn't acting well. Gold might have seen its high, so we did take profits in that area this week. Bitcoin got down close to the 50-day moving average, almost touched it, and rallying today with the market. And again, whatever the S&P does from here, risk on, risk off, we'll have to that will translate into the Bitcoin. So let's see the charts, and we'll go from there. So first, I just want to do forest from the trees on where we are and where we've been. So this is a weekly chart. It's going back to 2014 here. This looks very complete from a structure standpoint. There could be one more little new high in here, I'll show you. But as you can see on this chart, we have a negative divergence here. We see how price is moving up, negative divergence here, negative divergence here, negative divergence here, negative divergence here, and this indicator is very, very high. This was 22 for an example, okay? In 22, we had the negative divergences everywhere, same places. Even here was a little bit straight. And then we had this bear market here. So all indications from a long-term standpoint are we are in the late stages. We are in the beginning of the topping process, and we could have seen that top this week. But going into the shorter-term charts is that daily chart that I've been showing you. I had, given the decline that we had this week, I had to revise things a little bit, but I'm allowing here for this green 4 and this one more new high. So this week we did take a lot of money off the table because we're so close to our target zone. Our absolute target was what, the 62, 6,300, and we got a sell signal. So we wanted to take some aggressive action. That money will now sit in the money markets, and what we'll do here is if we see these new highs into this zone, we'll sell the rest of the portfolio, and we're hunkering on down into the bear market portfolio fully in this zone. Alternatively, this could have been A, B, and we come down here to support right in this zone, and we rocket from here. And if we got a buy signal off of here, we would probably look to put that cash to work. Alternatively, typical how patterns work out, this would be A, B, and we kind of come down here, here, and lower here. And that would start to confirm the bear market. And if we broke this support right here after a bounce like this, and we come down and break, that would get us out of the second half. And then we would have a full top in the market. So again, we took aggressive action. You're going to see a lot of cash in your account. We're about 50-ish% invested. We took profits in some good areas that we've done well in. Some of the languishing ones we took out as well. So we still have a lot of exposure just to the S&P, the tech market, and some commodities, as well as some international, the emerging markets, which, by the way, have been holding up a lot better than the S&P recently. Maybe we'll show that in the coming weeks. So that's our game plan here. We're in that position. We'll be parking that money in the money market. If we get this, we're going to be completely out. If we start to get this, we'll evaluate what that starts to look like to see if we have to do more. One of the huge reasons why we're acting with such urgency is the yield curve inversion. This is the last one I wanted, the 3-month and the 10-year went positive. There's the gray bar. And we can see when it was red and turned gray, red turned gray, red turned gray, marked the top in 2001, marked the top in 06, 07 or 07 here, before we had the 08, and right before the COVID crash. So history being a guide, we want to pay attention to this because no recession has started without one, okay? Does it mean it has to go in recession? No, we could have a soft landing like they're saying, but the Fed has only achieved a soft landing once in its history. So it does not have a good track record. So we don't want to lean on that. We want to lean on past circumstances. Plus, you can see how we're going vertical here in the market, okay? Over the last several years, this looks very unsustainable to us, and valuations are very, very high. Moving on to the bond market. So here's the weekly TLT. We've had this pink B down here. I think we're down 1.29% on the week. High volume. I wonder if we have to still go a little bit lower. This has been causing the market a little indigestion. The bonds are rallying a bit today. I'll show you the daily chart in a second. But we're still confident we're going to get this move up. But we're on the ropes here. If we break much below here, we're going to see new lows in the bond market. That means interest rates are breaking out. That means inflation is coming back. And that's what the Fed signaled this week. They did lower by 0.25, but it seemed like they kind of got dragged into the 0.25, not to spook the markets. But then he said in his testimony that probably we're only going to see 2 rate cuts, not 4. And they're going to kind of watch this inflation because we're sticking around this 2.8, 2.9 kind of area. And let me see if let's see if I could quickly show you the chart here. I didn't have this up, but you know, this is the inflation. Let me get this back in the. This is the inflation here. You know, going back, and you can see that this is the inflation down here from the 70s compared to now. So this is where we are now. Here's 22, 23. Look what happened here. We're following pretty close to the 70s. And what happens here is maybe we have a little more jostling around, but then it looks like inflation starts to come back. Okay, so this is the thing we have to be worried about with the bond market. Going into the ag, this is like the S&P for bonds. These are the 200 days and the 250 days long-term support. Also this breakout point where we couldn't get past, broke out, tested, took off. We tested once, we're testing again. We should start to lift off from here. However, if we break down below here, we're going to be exiting the bonds. Okay, it means something else is up. And this was all the rally that we got. All right, so it did stop where it had to. Bonds are bouncing a little bit today, which is great. But again, if we get a breakdown here, we're going to step aside. Moving on to the US dollar, I just wanted to show this chart. This is the monthly chart. I think I showed it to you. So this is the top in 2000, and this is where we are now. But it has kind of this nice rounded shape and this handle, and it looks like the MACD on a monthly basis is now positive, getting ready to break out to the upside. Okay? Usually when the dollar's breaking out to the upside, stocks, commodities, everything struggles. And usually it's either because rates are rising or there's some kind of crisis happening. So we're going to have to keep an eye on this. But this rise here in the US dollar here, and this is monthly again, so it's been a big move, almost 10% move in the dollar. You can't really notice it there, but that has affected you know, the gold and silver market. Here's the daily of the gold. I just wanted to zoom out. This is gold, okay, while that dollar has been going up. You see that gold is below its 50-day moving average. It can't seem to get above it. And then again, zooming out on gold, you know, our top was, we had 2,800, then it looked like maybe that wave 4 could get us up to 3,100. If the S&P is going to do this wave 4 up to here, maybe gold's still going to have that one more move. But again, when you look long term, this looks like we're going to need some corrective action here. We're very, very extended. We've done very well with our precious metals, so we decided to take money off the table and just kind of watch from the sidelines from here. Here's silver on a super long-term basis. This is a yearly chart, so this does look good as a cup and handle breakout. However, there is this scenario where this is A, B, and the metals are going to come down one more time here. So again, we didn't want to risk that. Now, when I zoom into the silver chart here, we can see that we had this beautiful breakout, but the target was 32, and we hit 32. So this pattern here that developed over years did achieve its target. And then when I zoom in further to this area right here for topping signs, you can see that we had a shoulder, a head, a shoulder, and we broke through on rising volume right there. Okay, and then we have to get back above it. So silver really needs to get going here. We're actually under the 200-day as we speak right now. So even with this very strong tape today, silver still can't get over the 200-day. So again, this is a topping formation breaking down. We'll see if silver can rip here again, if the S&P wants to take another leg higher, and we see that US dollar roll over. Maybe this can regroup. But because of this mini structure here on the daily chart that took here, the quarter to form and the breaking down, and then looking at the longer term charts, we decided to step away. Lastly, moving on to Bitcoin. Bitcoin did test there. Let me put the 50-day. I think it hit the 50-day on the low. Yeah, it did. So it hit the 50-day on the low. Again, when the market sells off, Bitcoin's going to sell off. Don't think Bitcoin's going to save anything. When the S&P and the NASDAQ top out for good, Bitcoin is going to succumb to that weakness. It's not going to do something different. Okay, so everything we know with the S&P is what we got to watch with the Bitcoin. They work off each other because it's all about risk, whether you want to take risk or not take risk. If we don't want to take risks with stocks, we definitely don't want to take risks with Bitcoin. So we'll see. What it looks like here, again, this may lead some evidence to the S&P hitting that higher 6250, which, folks, just so you know, the high was 6100. So 6250 is really not that much higher on a percentage basis, a couple percent maybe, something like that. But maybe we could see Bitcoin here kind of move around a little bit. If we start to see choppy action, then I would think this is kind of this wave 4, and we're going to get to our final target. This target has been my target forever. Could it extend up to 150, 170? Absolutely, because Bitcoin gets nuts at the end. But the target of Bitcoin's been 125,000. We got to 109,000. So there's still room to do that. But remember, Bitcoin has been rallying for a very long time. So this is why I cautioned you last week. From 22, I was down at what, 25, 50? I think even, let's go out a little further. Yeah, I mean, even here from the 22 lows, it was down 20,000, and we went up to 110,000. So again, folks, don't think that this is going to go to all these stupid numbers that you're hearing from people on the TV. Oh, we think valuation is 3 million. All these stupid numbers. The markets don't work like that. Now, maybe though eventually Bitcoin will do that. Okay, I've been very bullish on it, and I think the thesis is sound. But in the near term, I don't want you guys going crazy, because this has been the target, and we've rallied from 15,000 up to 109,000, 15,000, 125,000. That would be a really, really good move to set up the next kind of cycle from there. So yeah, let's just see. So it looks like on the week we're going to close down, let's see, about 1.5% on the week. So we were down, I think, over 2% on the week. So nice recovery here on Friday. But remember, let's see it here. The biggest rallies do come from bear markets because they're short covering. So let's see how this develops. I would expect in the micro short term, let me see if I have a chart I can show you as we go into next week. I won't be doing a report on Friday next week because I'm going to Jersey. I hope I get to see what everybody else is seeing over there. A lot of my friends have seen these drones / orbs / whatever anyone wants to call them. So I'm excited to go back and possibly see that stuff. But I'll do a report on Thursday, the 26th. I'm going to my Rutgers. Rutgers made it to a bowl game, and they happen to be here in Arizona. So I'm going to take the kids, and we're going to go see Rutgers. But I'll do a report Thursday morning. But this is a micro chart of the S&P. Here's the the big drop that we had. We recovered a lot of it today. We got back to the 50-yard line. So already we recovered 50%. Maybe we work our way lower just a little bit into the holiday. We could see this one more burst, but you see this brick wall we have here is around, let's say, 6,050-ish. This is a brick wall now, folks, okay? So even if we come down and back up here, we need to get over that to really be confident that this just wasn't the first leg down. Here's our A, B, C, and then we're going to roll over again, okay? Alternatively, here in green, 1, 2. This is 1, 2, and then we start to move to the upside. Then we're likely heading to that 62.50 number, and where we'll do some more selling, okay? So that's it, everybody. I want to wish everybody that's celebrating Merry Christmas. We'll be here a little bit on Christmas Eve. I think the markets are actually open a half a day. I know I'll be here, maybe a couple of people. Then we'll be closed on Christmas Day, and then back here Thursday and Friday. So if you need anything, feel free to give us a call. That's it, everybody. Have a great weekend. Merry Christmas. Bye-bye.